To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
Hello everyone. Here we are today discussing the amendments for the May 23 examination. Amendments for the upcoming exam become extremely important because you can definitely expect questions from this area in your examination, because of which this discussion becomes very, very important. This time when you talk about the audit paper, the amendments are very good. In fact, they're not very difficult, they're easy, but yes, there are major amendments that have happened. And because of which this becomes a very important and an interesting discussion as well. Okay. So there are altogether 5 areas where amendments have happened. First is in the case of a small company definition, which we study as a part of applicability of CARO. We study when you talk about the ceiling limit for the maximum number of audits a company can take up. Correct? So there we define the small company under section 2 clause 85. So there has been a change with respect to the threshold, which we'll be taking up as a discussion. Second, there is a very good change or a major change that has happened in the classification of NBFCs. So we earlier studied the types of NBFCs. The types will remain as it is. But yes, now for giving a standardized prudential norm, income recognition norms and all of that, because of which there has been a different kind of classification which has happened. So we'll take up that discussion. The third one is a simple, a very negligible one also, where forensic audit has now been called as the forensic account. Okay, it is forensic accounting. So obviously the forensic auditor will also be called as the forensic accountant. So that's a very minimal, very small one. Fourth, we are going to talk about the most important change that has come, the changes that have come, that is in the peer review topic. Okay, so that is going to be the major discussion that we are going to have in this particular session, where we are going to talk about what all changes have come, which new elements have been added. So that is going to be one of the major discussions. And finally, there are some changes in the professional ethics. So these are 5 different areas where we are going to talk about the changes. Few places things are very simple, but yes, peer review and professional ethics, we are going to have a little extra discussion. All right. Okay. So with this, let us get started. I will share the screen with you I have just picked up the RTP, which has been released by the Institute, because all of you will be having the same copy. And that is the reason the learning will become very simple. Okay. So when you're listening to this lecture, see that you have the audit RTP along with you. Okay. The Institute RTP released along with you, so that you'll understand properly what changes we are talking about. All right. So with this, let us get started. So as discussed, I told you that there is a first thing that we are going to talk about the amendments for May 23. Okay. So the first and most important thing, as I told you, is regarding small company. Okay. So that is covered in the company's audit. Okay. Now, small company. Okay. We all have studied. Okay. It is section 2 clause 85 of the Companies Act 2030. Here there has been a change with respect to the limits of the paid up capital and the turnover. Where you have studied of 2 and 20, that is paid up capital not exceeding 2 crore and turnover not exceeding 20 crore, it has been replaced by 4 and 40. Okay, so now this becomes a very important part. So we know that a company which is not a public company and which has a paid up capital not exceeding 4 crore and a turnover not exceeding 40 crore, we classify that company to be a small company. That is the definition now applicable as per section 2 clause 85. Now it becomes very, very important discussion for us here, because if you look at the CARO applicability, the CARO 2020, we say it is not applicable to a small company. So basically in the examination, you have to be very careful and see whether this particular company which is given, does it fall under the small company definition as per the new legislation. So because of which this limits have to be understood properly. Also, when you talk about disqualifications of the auditor, when you talk about the ceiling limits on the number of audits, when we talk about the 20 company audits, which an auditor can take up, in that you see small companies have been excluded for the counting purpose. So in the same manner here, you have to understand now the changes will be with regard to the paid up capital and the turnover. So you can simply have an understanding here. A small company means a company other than public company, and that you quite well understand by now that small company can never be a public company. Once you read it as a public company, the question of small company is completely gone off. Correct? Be small company, be section 8 companies, be a company as a holding company of some other company. subsidiary companies. These companies can never be considered to be what? Small companies, correct? So basically, companies other than the public companies whose paid up share capital does not exceed 4 crore rupees, obviously cumulative condition, and turnover as per the profit and loss account for the immediately preceding financial year does not exceed 40 crore. Correct? So here the limit is 4 and 40. This is a very, very important part. Okay. So you can definitely expect questions in the examination regarding applicability of CARO, or asking you regarding the ceiling limit on the number of audits and all, where they could actually pick up this particular amendment and question you on that. All right. So that is the first one, which is a simple one. When it comes to chapter 7, audit committee and corporate governance, I would recommend every student to go and visit the RTP discussion for the November 22 examination, wherein this particular amendment has been discussed in full and I've covered it totally. Okay, this is the same thing repeated here. As I always tell, the only reason to bring it up in the next RTP also is because the institute material has to get updated for this particular matter. Okay, so because of this, in this particular RTP of May 23 also, the amendment is still appearing. So you can just quickly go through the RTP November 22 discussion of the amendments that we have had, and you'll find it in detail, everything, line by line. Okay, so this entire part is covered there. Okay, so it is up to the risk assessment that you take up everything here. All right. Yes, all of this is actually covered there. Okay. Now comes to the most important discussion, or one of the important discussions that we are going to have is regarding audit of NBFC. Okay. Now, when you talk about NBFCs, okay, you have to recollect what you have already studied. We talk about types of NBFCs. Okay. In types of NBFCs, we talk about investment and credit company. You talk about infrastructure debt companies. Then you talk about housing finance companies, the CICs, non-operative financial holding companies. Correct? All of these are the types of NBFCs. Obviously, types will not go under any change. Types are going to remain as it is. Those different types of NBFCs will still continue. But now what has happened is, when you look at these different types, you see that for every different type of NBFCs, looking at some criteria, there is going to be different prudential norms, like income recognition is different, asset classification is different, like NPA classifications are going to change, provisioning norms are going to change. So for every different types of NPAs, there is going to be a different scale altogether given. So obviously the complexity increases. So what has happened is, now there have been guidelines issued, okay, or there has been a new regulation which has been come up, which is based on the scale-based regulation, which is called as. Okay, so for the purpose of proper regulatory requirements for NBFCs, okay, now the total NBFCs, all the NBFCs are now going to get categorized into 4 different levels. Okay, so what they have done is the types will continue as it is, but these types are now going to get classified into 4 layers. They're going to get classified into 4 layers. So basically, if you draw like a pyramid, okay, you can see that there are going to be 4 classifications. Okay, here there is going to be the base layer. Then you're going to have middle layer. Then you will have upper layer. And finally, you will talk about the top layer. Okay, so here basically, if you look at it, base, middle, upper, and top layer. So all these different types of NBFCs that we have studied earlier, all of these are now going to get categorized into different types of layers. These only NBFCs will fall in one of these layers. But now, depending upon the size of the NBFC, the risk perceived, that is the element of risk, how much is the risk involved, based on that, they have done the categorization depending upon the asset size. Okay, so they have taken different parameters in order to classify whether it goes in the base layer, whether it goes in middle layer, upper layer, top layer. Now understand, if you do this kind of classification, what happens is, all the NBFCs which are going to fall under the base layer, they will have the common norms to be governing them. Which falls under the middle layer, they'll have a common norm. Upper layer, they'll have the same. Like for example, if you talk about the asset classification, whether it is NPA or it is a performing asset, then for base layer, there is going to be a common criteria. Middle layer, there is going to be a common criteria. Upper layer, there is going to be a common criteria. So this is basically a standardized way of giving the prudential norms for a specific class. Okay, so now different types of NBFCs are now getting categorized into these. All right. So now for the exam point of view, it becomes very important that you will be able to pick up properly which comes under the base layer, which will come under middle, upper, and top layer. Before we get started with the reading of it, okay, I'll just give you a simple understanding behind it. When you talk about the base layer, okay, in the base layer, if you look at it, these are going to be the least risky NBFCs, which carry least risk. Okay, so basically, when you do not accept the deposits, okay, when you're not a deposit taking entity, or when you're having no customer interface, okay, so in these cases, what is happening is the risk element is going to be less. So wherever the risk element is going to be less, we call it to be a base layer. Then you talk about the next one, that is going to be middle layer. So what they have done is, in middle layer, they have fixed some kind of NBFCs compulsory to come as a part of middle layer. Apart from that, there are going to be few NBFCs, okay, like CICs, etc. These can either be in the middle layer, or they could also get categorized as an upper layer. So what they have done, the classification has been, few NBFCs will compulsorily fall in the middle layer only. Like we have the, we have this SPDs, okay, so where these are going to compulsorily fall under what? The middle layer. But when you talk about the other NBFCs, like CICs are there, okay, housing finance are there, these could be in the middle layer, or they could be on the upper layer, depending upon the parameters of the scale of the NBFC or the size of the NBFC. Okay, then when you talk about the upper layer, they have kept it very clear that top 10 NBFCs, depending upon their size, they will be classified as the upper layer. Top 10 NBFCs of the country, okay, they will be considered to be coming where in the upper layer. There is no other parameter which has been taken up here directly, no risk element, nothing. Directly they look at the size. And if it is considered to be the top 10, then in that case, you categorize it where? Upper layer. Okay, now, when you talk about the top layer is basically empty. Top layer is basically empty. That means as of now, there is nothing appearing in the top layer. But then whenever RBI considers, okay, or whenever by the regulations it has been decided that yes, there is one particular entity or one particular NBFC in the upper layer which is really having a very high risk, it is reaching that level of significant risk, then in that case what they will do is, this particular NBFC which is sitting in the upper layer, they will then transfer it where? To the top layer. So as of now, we should understand that top layer is empty. This will get filled up only with the understanding that when there is any particular NBFC in the upper layer and where this risk is getting significant, it is going to be very heavy. Then in that case, that time that particular NBFC will be carried where? To the top layer. Okay, so that is the basic understanding that you get with respect to the classifications. So you can see here with the language itself, okay, existing NBFCs and regulations, what they have done, RBI has revised different facets of the existing NBFC. So existing NBFC, the types will remain as it is, but now every type, depending upon certain parameters, is going to get classified in any of these 4 layers. Okay. Classification regulation like capital requirement, okay, governance standards, prudential regulations, etc., based on the 4 layers that are defined on what? Size, activity, and perceived riskiness. Most important part is the risk element. Okay, so basically the understanding should be, because they want a standardized approach based on the layers, okay, they have divided them into 4 different layers. So the 4 layers are base layer, I explained it to you, NBFC middle layer, then you have NBFC upper layer, and finally you have NBFC top layer. The top layer is ideally expected to be empty and will be filled by RBI based on the required need. Okay, now let us see the categorization. Now this becomes very important. First of all, what is there in the base layer? As I told you, the risk element should be really minimal here. It should be less. First of all, non-deposit taking NBFC below the asset size of 1,000 crore. Understand, if it is deposit taking NBFC, it will directly go in the middle layer. Only non-deposit NBFCs are going to get categorized in the base layer. If it is deposit taking, even if it is small, doesn't matter, it will directly come where? In the middle layer. So first is what? Non-deposit taking NBFCs, which is not accepting any deposit from the public, below the asset size of 1,000. Okay. Now, second, NBFCs undertaking the following activities. So this is very simple. Peer-to-peer lending platform. So first, P2P is what? In fact, we say that the borrowers and the investors, okay, they're going to act as a mediator. So basically, they are going to get the mediator link between whom? The people who are giving the money and the people who are lending. Okay, the lending and the borrowers. They're going to act as the mediators. Okay, so they are called as the NBFC's peer-to-peer lending platform. That is, they are going to simply act as the mediator between the borrower and the person who is the receiver. Then NBFC account aggregator. What is account aggregator? These are basically NBFCs which are going to, actual focus is going to be collecting information of the customers, like their net worth is there, or any other financial data, all of the information of the customer, and these are going to actually sell this financial information. Okay. So basically they're account aggregators, getting all the information, collecting all the information required for the purpose of the NBFCs. So they are account aggregators. And non-operative financial holding company, the definition will remain as it is, what you have studied. And NBFCs not availing public funds and not having any customer interface. So when you have no public funds and no customer interface, absolutely, obviously risk element is going to be less. Okay, so your very, very important discussion is that, first of all, it should be non-deposit taking NBFC, and here the asset size should be 1,000 crore, less than 1,000 crore. Second, 3 specific categories I've covered in the base layer. First, P2P platform. Second, account aggregators. And then you have non-operating financial holding companies. And finally, those which are not availing public funds and not having any customer interface. Okay, so these are all low risky ones which they have categorized into base layer. So the understanding would be, for all of these, there'll be common prudential norm, common capital requirements, common asset classification, income recognition norms. All of these will be a common thing. Okay, whichever NBFCs fall into this layer. Then moving to the next one, that is the middle layer. Now what happens in the middle layer? In the middle layer, if you look at it, all deposit taking NBFCs, irrespective of asset size. Okay, so I told you, once you are a deposit taking NBFC, you will never get categorized in the base layer. You'll directly come where? In the middle layer. Then non-deposit taking NBFC with asset size 1,000 crore and above. That is quite understandable, because non-deposit below asset size 1,000 is come where? In the base layer. So obviously middle will be including more than 1,000 and more than 1,000. Correct? Then apart from that, they have given you 2. SPD, that is standalone primary dealers. Okay, these are dealing in the government securities. Infrastructure debt fund NBFCs, that you know, infrastructure funds, these are investing in infrastructure. Then you have core investment companies, CICs, housing finance companies, infrastructure finance companies. So basically, okay, these are the NBFCs that are going to fall where? In the middle layer. Now you have to understand properly. In middle layer, first of all deposit taking, plus non-deposit with 1,000 crore or more asset size. Understand, very important, which I'm going to go through once again, SPD, standalone primary dealers, and infrastructure debt fund. These 2 compulsory will come in the middle layer always. Always. When you talk about SPD and IDF, that is infrastructure debt funds, these are compulsory going to be as a part of the middle layer. But when you talk about the remaining, that is when you talk about CIC, when you talk about housing finance companies, when you talk about infrastructure finance companies, these all can either be in the middle layer or the upper layer. Okay. When upper layer, when these become top 10 NBFCs, then they will get shifted where? To the upper layer. But SPD and IDF will compulsory remain where? In the middle layer. Now, this why I'm telling you very important, because you could be tested as MCQ for this purpose. So because of that, you have to be very careful. These 2 compulsory, irrespective of any other factor, will always remain where? In the middle layer. Okay. So that is about the middle layer thing. And the last 3, okay, would be either in the middle layer or it could be upper layer. When it will go to the upper layer, where it is taken to be the top 10 NBFCs. Got it? Then now look at the upper layer discussion. The upper layers will comprise of those NBFCs which are specifically identified by RBI as warranting enhanced regulatory requirement based on the set of parameters and scoring methodology as provided in the appendix to the circular. The top 10 eligible NBFC in terms of their asset size shall always reside in the upper layer. Now, most important discussion is this. When you believe that you require even enhanced regulatory requirement, like more stringent prudential norms, more stringent regulations and all, then what RBI will do, they will remove it from the where? Middle layer, and they shift it to where? The upper layer. So they are going to be top 10 NBFCs based on what? Asset size. Okay. So that will come where? In the upper layer. Then when you talk about the top layer, I told you as of now, the top layer is going to be empty. It is always going to be empty. As and when RBI believes that, yes, a particular NBFC from the middle layer, if it has to get shifted to the upper layer, top layer, from the upper layer, it has to get shifted to the top layer, depending upon the significant risk that it is carrying, then in that case, RBI will give a regulation where it will get moved from upper layer to the top layer. Okay, so as of now, we can understand top layer will ideally remain empty. This layer can get populated if the RBI is of the opinion that there is substantial increase in the potential risk from the specific NBFC in the upper layer. So you have a scope of upper layer getting transferred to the top layer. Such NBFC shall move from to the top layer from the upper layer. Very important. Okay, now this is the discussion. Now you'll be able to easily pick up because I already discussed when I discussed the 4 layers. I've told this to you in detail. Now, if you understand, first one, NBFC P2P peer-to-peer account aggregators, non-operative financial holding companies, and NBFC without public funds and customer interface will always remain where? In the base layer. Understood? Then, NBFC deposit taking, CIC, IFC, HFC will be included in the middle layer or the upper layer and not in the base layer. Correct? Because see, first of all, deposit taking, and then CIC, IFC, HFC, I told you, either they can be in the middle layer or the upper layer. They can never be in the base layer, as the case may be. And very, very important is this. SPD and IDFC, NBFC will always remain in middle layer. Correct? Then, the remaining NBFCs, namely investment and credit companies, microfinance institutions, all these others, okay, whenever you talk about all the remaining NBFCs, okay, they will be categorized based on the parameters. Based on that, they'll go to the base layer or they'll go to the middle layer or the upper layer, depending upon the criteria, the parameters. Now, very important again here, government-owned NBFC shall be placed in the base layer or the middle layer, as the case may be. They will not be placed in the upper layer till the further notice. So whenever you see government involvement is there in the NBFCs, risk element, we consider it to be less. So we put it where? In the base layer or the middle layer. Understanding is clear? All right. Then, moving to the next one. All references to NBFC ND shall remain NBFC in the base layer. See, non-deposit, undoubtedly, I told you, if it is a non-deposit taking NBFC, it will go in the base layer. And all references to NBFC deposit taking and NBFC NDSI shall mean in middle layer or upper layer, as the case may be. It's fine, the same discussion again. Okay, then. Unit 3, if you look at forensic accounting is now called, the forensic audit earlier is now called as the forensic accounting. So here in examination, why it is important, I'll tell you. If suppose in the exam they ask you what is the scope of forensic audit or the duty or the objective of the forensic audit and all. Now the word will be used is what is the objective or what is the scope of the forensic accounting. So don't get carried away. Accounting we have never studied. We know only about audit. Understand the entire replacement of the word audit is with the word accounting. So whatever you studied with respect to forensic audit will still continue the same, with only the questions will now be framed with respect to accounting instead of using the word auditing. Okay. So they say the forensic audit will be called as the forensic accounting and the forensic auditor will be considered to be the forensic accountant. Okay. So everything will remain the same. Okay. The words have been replaced. Okay. Now, you need to be very, very careful because we are now going to talk about something really important, and that is regarding the peer review and the quality review topic, where there have been significant changes. Okay, so very, very important point, examination discussion. And according to me, I genuinely believe that this will definitely get tested in the upcoming examination, so that I see that you really have a good understanding of all these amendments that have happened in the peer review topic. Okay, now, whenever we talk about peer review, we know the concept very well that there will be one particular firm which is going to, review a practice unit, okay, on the application made by either the practice unit or maybe sometime the board of discipline can order this kind of peer review, or the peer review boards can pass an order and all of that. Okay, there could be, depending upon the, which size or which level you belong to, the peer review certificate you have to hold, correct? So a peer review is where the checking is going to happen, whether all the technical, okay, all the professional, all the ethical standards have been properly, adhered to by the practice unit or not. So that is the reason we'll be having the peer review conducted. Now, first of all, we have studied all the peer review understandings with respect to the statement and the statement on peer review. So basically till today, peer review, whatever you have studied, it has come from where? A statement or the statement on peer review, which was by 2020. So statement of peer review 2020 is to give you all the understanding about the peer review procedure, the steps involved in the peer review, what is peer review, who are the peer reviewers, who are eligible to be, how the reporting will happen. Everything was given by this particular statement of peer review. Now, this entire peer review statement has now been substituted by something new that is called as the guidelines or the peer review guidelines 2022. So wherever you studied as per the statement on peer review 2020, now automatically you have to replace it by saying it should be as per the peer review guidelines 2022. So the entire statement is now getting replaced by the guidelines. Okay, peer review guidelines, that is 2022. Okay, now, if you remember properly regarding the objective of the peer review, or basically why peer review is conducted, is because the reviewers have to ensure that the practice unit is actually complying properly with all its technical, professional, ethical standards and all the other regulatory requirements. Correct? Now, what they have done is, now they are saying that the word technical, professional, ethical standard as applicable, including other regulatory requirements thereto, shall be now substituted with technical will remain as it is, professional will remain as it is, ethical standards will remain as it is. What they have done is they have included a new term called as Audit Quality Maturity Model, AQMM. Audit Quality Maturity Model. Audit Quality Maturity Model. Wherever applicable, or any other regulatory requirement as may be prescribed by the council or any committee, remaining part will remain the same. So technical, professional, ethical and regulatory will remain the same. Only here they have inserted one more thing, and also to check whether they have adhered to the audit quality maturity model if applicable. Okay, now what has become a problem is that though they have inserted this particular word or this particular model as a part of understanding in peer review, they have not given what is the meaning of audit quality maturity model. So only for you to understand a little or get a little idea of what is this, I will just give you a brief of what is this particular AQMM so that you understand what it is. But when you look at your syllabus, they have not given you the meaning of what is the AQMM. Okay. So basically AQMM, okay, is nothing but a way in which a quality evaluation is to be done. Okay, that means a particular practice unit, in order to understand whether they are maintaining the quality control standards or not, or quality norms are maintained or not, they will take something called as a self-evaluation. It is a self-evaluation tool come up by the council, where they tell that they have designed a particular matrix. They have designed a matrix, and this particular matrix, okay, is basically going to have 3 sections. Section A, B, and C. And here there are going to be detailed questionnaires. So there are going to be n number of questionnaires. Okay, questions are going to be put up. And what happens is every practice unit, okay, who is going to take up the audit of, the entities which are, required for this kind of evaluation. Like you can take the example of big entities. Okay, like for example, listed always will be there only. So suppose if you are doing the audit of listed entity, that means if you're doing the audit of a listed entity, that means you are the practice unit for which this AQMM will become applicable. So when AQMM becomes applicable, you have to undergo this kind of self-evaluation. That means you as a practice unit yourself should evaluate the quality of your particular firm. So what you will do is you will have to use this particular matrix which has been designed, which will happen detailed questionnaires, and you have to give your references or give an answer to every question present there. Based on that, markings will be given. So you'll have points there. So altogether, these are going to be 600 pointers, and you have to pick up all the questions, and based on the evaluation that you take up, you are going to give points to yourself. Based on that, you'll be able to give a proper rating to your particular firm. Okay, so you will be able to self-evaluate and give a what? Rating based on this particular matrix to your firm. So AQMM is basically a self-evaluation technique, self-evaluation tool, which has been come up by the institute. Okay, so the Center of Excellence has actually come up with this particular matrix, wherein they have given multiple questions which the firm has to answer for themselves, and based on that they are going to actually give rating to their own self. Okay, now this particular rating you're supposed to take up. Okay, so this is applicable. What they're using is they have to do the audit quality maturity model wherever applicable. Now, wherever applicable means for every practice unit, this kind of evaluation is not mandatory. It is applicable for only those which are going to be in the public interest entities, basically. So first of all, it is listed entities. If you're doing the audit, you require to undergo the self-evaluation. That is, you have to take up the audit quality maturity model evaluation. Then when you talk about bank, when you take up the bank audits, even that time it becomes important. Even insurance company. Okay, so these are the basically 3 areas or 3 entities whose audit if you do, okay, then that particular practice unit has to take up this AQMM. That is audit quality maturity model. Okay, they have to do self-evaluation under that. Okay, so that was all the extra detail, not very much relevant because it is not given to you as a part of a material. So not exam point of view. So wherever they are using the word technical, professional, ethical, now you also say that they should also take up the audit quality maturity model. Okay, only if it is applicable. That's the only thing. And why applicable? Because for every practice unit, it is not mandatory. It is only for those who are taking up the audit of the specified entities. Okay, then. Moving on to the next one, they talk about is the meaning of reviewer. Reviewer, the meaning will remain intact only where they have just added the guideline year. That means a member duly approved as it is and empaneled by the board on fulfilling the qualification prescribed for a reviewer as per the guidelines. So this particular statement is extra. Okay, that's it. The guidelines 26 of these guidelines. Okay, that's nothing more. Then comes to branch peer reviewer. A branch peer reviewer is nothing but if the practice unit has a branch and if that is getting reviewed, then the reviewer will be called as what? The branch peer reviewer. Obviously, all his duties, all the reporting requirements, all the other factors, the same rights, same obligations he will have as the practice unit reviewer. Okay, so it will be the same. So the main reviewer, whatever duties and obligations he has, the branch peer reviewer also will have the same. So if the practice unit is having a branch, then this particular branch is getting reviewed. He'll be called as what? The branch peer reviewer. Okay. So that is also simple, means a reviewer appointed to conduct the peer review of the branch of the practice unit. The qualification and the other obligation and the duties of the branch peer review shall be the same as that of the main reviewer. That is the main reviewer. Okay. That is also the same, nothing difficult. Now comes the important discussion regarding a new concept altogether called as a new unit. Okay. Now, first you need to understand why are you going to study something called as a new unit? Why is there a requirement? Now, what happens is new unit, you can understand they are just come up. Okay, they are new to the industry. So they are maybe the scale of operations, the scale of activities that they take up could not be very heavy, or maybe they've still not started giving the assurance engagement absolutely. And if they're conducting the peer review, understand the practice unit only has to pay all the fees for the peer review and everything. Though it is appointed by the board, the peer reviewers will come and do the audit, okay, because they have been directed by the board and all. Ultimately, the fees for the peer reviewer will be paid by the practice unit. Okay, so fees is the problem. Then depending upon the timeline of within how much period the peer review has to be completed. Then when you talk about the on-site visits by the peer reviewer for the new units, there what they have done is the existing units and the new units, they have done some kind of relaxation to the new units. So because of which it becomes important for you to understand which basically you're going to categorize as a part of new unit, so that you understand properly which other regulations applicable to the new unit. So for that purpose, you need to understand first what is a new unit, which units you classify to be what? A new unit, and all the other we call in very regularly as existing units. Okay, so for existing units, the regular protocols will be followed, but for new units, there has been some kind of minimal fees are there. The timeline has been reduced. Okay, the on-site visit by the reviewers have been made less. So the protocols, the regulations have been considerably brought down. So because of that, you study the concept of the new unit. After the definition of the practice unit, the following definition, new unit, shall be inserted. Now, what they're saying, what is a new unit? Before we read, you need to understand, whenever a new unit is going to apply suo motu, okay, for peer review. So they're applying to the peer review board that they want a peer review to be conducted. As on the date of this application, if suppose there have been an existence for less than 12 months, then in that case, we say that this particular entity, this particular practice unit is a new unit. When you are applying to the peer review board that you want a peer review to be conducted for your firm, at that particular point of time, when you're making this application, if suppose you have been in existence for less than 12 months, then in that case, we say you are a new unit. Okay. Otherwise, maybe you have exceeded the period of 12 months, but you are not giving any kind of assurance services till today. That means your firm is only into, tax filing, or maybe it is doing income tax return filing services. They're giving tax advisors, okay, consultancy. Basically, they are not at all into attestation services. You have only provided all the other things which are allowed for you. So basically, here we are saying that it should be on the date of application to the peer review board. If you're in existence for less than 12 months, obviously you are a new unit. Otherwise, if suppose you have been in existence for more than 12 months, but the criteria is you should by that time not provide any assurance services. Even then you'll be still called as what? A new unit. Understand, peer review we conduct to check what? the quality of your assurance engagements. Correct? So obviously, if you're not providing the assurance engagement and you still require a peer review certificate, then even if it is more than 12 months, not providing any of the assurance services, even then, in that case, you're called to be called as what? The new unit. Okay, so let's understand. Means a firm whose date of establishment is less than 12 months, immediately preceding the date of the receipt of the application of peer review. Okay, and which may or may not have rendered any assurance service during the said period. Or a practice unit in existence for a period exceeding 12 months, but not rendering any assurance service. Got it? So they're telling what? So when you're making the receipt of application of peer review and which may or may not have rendered any assurance service. So your assurance criteria, they're not taken into account, but your assurance criteria is taken into account. Okay, that's called as a new unit. Okay, so when you're receiving they're telling the receipt of the peer review. Okay, so the application for peer review, that means as on the date of that application, you should be less than 12 months. Okay, then peer review board means the board constituted by council. Again, the same, you have nothing to be taken. Okay. Now, in this discussion that we had, we are going to just give an importance to professional ethics here. Okay, in case of professional ethics, you have to remember there are two clauses which have been touched upon. First of all, when you talk about AQMM, okay, audit quality maturity model, understand this is a self-evaluation tool I told you. And this has to be taken up compulsorily by those practice units on which it is applicable. And basically there you come up for giving rating to your own self. Now this rating, what you have calculated for your own self, you cannot disclose it to the outsiders. You cannot use it for the purpose of getting publicity. If this particular rating has been used by you anywhere in order to gain some kind of publicity, in order to make some kind of advertisement, then in that case, you will be guilty under the clause 6 of the part 1 of the first schedule. Understand properly. So this self-evaluation is merely for the purpose, is only for the purpose of this particular requirement, and the peer reviewer will only check whether the evaluation which you have done for yourself, whether it is appropriate or not. Apart from that, you will not be you will not be allowed absolutely to actually use this particular data anywhere else. Correct? So that is the understanding here properly you take up, that this thing cannot be used to get publicity. You cannot show the rating that you have calculated for yourself, that yes, we have got this much and that much and all that. The rating cannot be given. You'll be guilty under clause 6 of the part 1 of the first schedule for the purpose of getting advertisement done through that. Second important thing is, now you see that the peer review statement has been replaced by peer review guidelines 2022. For this, you have to recollect that when you study the clause 1 of the part 2 of the second schedule, what do we study there? A member of the institute shall be guilty of professional misconduct if he contravenes any provision of the act, regulations made thereunder, and also the guidelines which are issued by the council. Correct? Now, because if you look at it, they're using the word guidelines. Suppose if any of the peer review guidelines are not followed by the practice unit, then in that case, they will be guilty of professional misconduct when you talk about the clause 1 of the part 2 of the second schedule. Understanding? So this understanding of these two particular clauses which have been picked up on now in the peer review, you have to be very careful. So this peer review guidelines, if you don't adhere, it will be a contravention of the guidelines, because of which you will be guilty of professional misconduct under clause 1 of the part 2 of the second schedule. All right, so that's important one. Then scope of peer review. Okay, in scope of peer review, we study that, there are altogether 6 scopes or 6 things already given in the scope. Like when we talk about, technical, ethical, quality, technical, professional, ethical standards have been followed or not. Then when we talk about the quality of reporting, okay, then quality of services rendered and all that, correct? Then you simply have to put in one more, fourth one. So after the third point, you have to insert the fourth one, which is going to talk about self-evaluation under audit quality maturity model and any other guidelines issued by the Center for Audit Quality. Meaning of this is, when you talk about scope, okay, scope means what? What all the peer reviewer has to check in detail. So when you talk about the scope till today, you have studied the 6 pointers. Okay, the quality of reporting you check, whether quality standards have been maintained or not, whether proper technical ethical standards have been complied or not. Correct? So there you have to insert one more, But this will be understand if this particular practice unit is required to adhere to the audit quality maturity model, then in the scope you have to see whether the peer reviewer should also ensure that whether this particular practice unit has taken up self-evaluation under audit quality maturity model. Got it? So that is important here. So that is one thing you have to add in the scope, only if it is applicable for the practice unit. Okay, then the scope of peer review also includes one more. What they have done is after the altogether 6 are there. So they're telling first, second, third already as it is. Fourth one you insert. Then fifth, sixth, seventh will become. Now you come up with the next one. Okay. So next one they're telling. Last one they're telling any other technical, professional, ethical standards and other standards issued by any authority governing the profession of chartered accountancy. That means now the peer reviewer, apart from the 6 existing things that he had to check, he will also check the self-evaluation under the AQMM model. And also he will be checking if there is any other technical, professional, ethical and other standards which have been issued by any regulations or regulators which are governing the chartered accountancy profession. Okay, so 2 more important things have been added for the scope, that is AQMM, okay, if applicable, and if any other standards have been released, whether they have complied with those standards or not. So that's quite simple. Then when you talk about the assurance engagement, when you talk about, in peer review, you have to understand peer review is basically done only for the assurance services that you are rendering. Okay. So when you learn about what are assurance, you get a negative definition and you talk which are the services not considered to be assurance. Like, for example, when you're giving services with regard to representation in the taxation matters, when you're giving consultation with respect to tax matters, when you're helping in the compilation of the financial statements, these all are not considered to be assurance engagement. So like that, now what they're telling is, they've included there one more point, which they're saying, it's become like a residual pointer here. Any other service rendered or a function performed by a practitioner which has not been prescribed by the council to be assurance engagement. Okay, now that is important. So suppose if the council gives a particular statement saying that this is not an assurance engagement, or they don't include it as a part of assurance engagement, very clearly, peer review will not be on that. It will not be considered to be an assurance engagement. Correct? Then, okay, now comes to the important discussion, which you please highlight and understand for exam, very, very important. Okay. Here they talk about is the applicability, okay, that we studied earlier, okay, regarding when peer review becomes applicable. Okay, now listen to this very carefully. Whole para 4 applicable to shall stand substituted with the below paragraph. Okay, now earlier, if you remember, okay, when you study the peer review, you study it as level 1 forms, and you talk about the level 2 forms, that is the level 1 practice units, level 2 practice units. Depending upon which level you fall to, then you will have to conduct the peer reviews, okay, depending upon the criteria. Okay, but now this criteria of level 1, level 2, which was actually very complicated to even remember, very difficult to remember, okay, complicated. Now what they have done is they have made it a little bit easy, okay, for understanding purpose, and you can be able to remember also. Now what they have done is they've come up with a mandate, and basically on with that particular guideline of the peer reviews, they have now categorized the peer review in 3 categorization. One, they have made mandatory peer review, one voluntary, and other is the special case. So now this level 1 category, level 2 category of the practice units have been completely nullified. It is gone. And now what they've done is these peer review guidelines which have now come up, they have replaced the peer review mandate implementation. Okay, so what they have done now they have given 3 ways in which the mandate will be applicable. First, it is made mandatory. That means these practice units should compulsory have peer review certificate. Otherwise, they will not be allowed to take those respective audit engagements. That is the assurance engagements. Voluntary is where the practice units can voluntarily apply to the peer review board to get the review conducted. Special cases where the board of discipline, okay, or the discipline directorate, or maybe the secretary, ICAI, okay, if they are of the opinion that yes, a peer review of a particular practice unit has to be conducted, it could be because of all the information that you get from resources or the sources that are there. Due to some kind of reason, these particular discipline directorates and all, by their decision, they decide that yes, for this practice unit, we require to have a peer review to be conducted. Okay, then in that case, they will pass an order and the peer review has to be done. So it is 1 mandatory, 2nd voluntary, and 3rd is the special case. Now for mandatory peer review, understand that these particular practice unit without having a peer review certificate cannot take up the peer review. Okay, sorry, they cannot take up the assurance services. Okay, now what they have done, listen to this carefully. it was clarified that holding a valid peer review certificate by the practice unit should be a prerequisite for undertaking audit of all the entities falling under phase 1, 2, 3, and 4 of the mandate from the respective dates of the mandate becoming operative. So now the coming discussion is all those particular entities that we are going to discuss, where you see they've also given the effective date. That means if the practice unit is going to take up the audit of these particular entities, then in that case, only if they have a valid peer review certificate, only then they will be allowed to take. If at that particular date, they don't have a peer review certificate, okay, which is not a valid peer review certificate, then they will not be allowed to take this particular audit. And the date of applicability will be this. Okay, like how to understand, I'll tell you very simple. They have categorized into two things. One, they have given type of the entity. One is the nature is given. Or they have given one more condition, that is partner-based condition. So any of this you fulfill, okay, the peer review certificate you require compulsorily, otherwise you cannot take up the audit only. Correct? So either it should be the type of the entity, the audit you are doing, or they have given some partner condition. If this partner's conditions have been satisfied or the type of entity, then you have to get the peer review certificate. Okay, what they say. Now, first, phase 1. It is said, if a practice unit which proposed to undertake statutory audit of enterprises whose equity or debt securities are listed in India or abroad as defined by SEBI LODR regulations, for these practice unit, there is a prerequisite of having peer review certificate. So basically, when you talk about listed entities, whether your equity, your debt are getting listed, okay, whether in India or outside India, and you as a practice unit, if you're doing the audit of these listed entities without a peer review certificate, you cannot take up their audit. And this is applicable from 1st April 2022. That means it is already in force as of now, that today when you take up the audit of any listed entity, you have to have a valid certificate of peer review, the peer review certificate. Got it? That is first one. Here in the first phase, they have not given any partner-based condition. Okay, but in all the second, third, and fourth phase, you will see one is of the type of the entity, and second is with respect to the partner-based condition. Either of the two you fulfill, then in that case, you will compulsory have to have a peer review certificate. Second, now this is going to be applicable from 1st April 2023. Okay, so now practice units which propose to undertake statutory audit of unlisted public company. Unlisted, because listed obviously it has become from 1st April 2022. Now, unlisted public company. Here we have this particular norm. It is 500, 1,000, 500. 500 is paid up capital, 1,000 is turnover, and again you have borrowings 500. Or. If any unlisted public company has a paid up capital of not less than 500 crores, or having annual turnover of not less than 1,000 crores, or having an aggregate outstanding loan debenture deposit of not less than rupees 500 crores, as on 31st March of the immediately preceding financial year. For these practice unit, there is a prerequisite of having peer review certificate. Okay, so here the norms are 500 paid up capital or turnover 1,000 crore or more, and then 500 crore or more should be the borrowing. If it is like that, then these practice units, okay, if you are doing the audit of any of these, okay, any of the unlisted public companies which is fulfilling any of these criteria, then for your practice unit to become the auditors of these particular entities, compulsory you have to hold a valid peer review certificate. Otherwise, you'll not be allowed. And these limits, when you check, 31st March of the immediately preceding financial year. Or what they say is, any particular firm, practice unit, rendering attestation services and have 5 or more partners. So any point in time, if you have 7 partners and you're providing assurance services, then compulsory you require to have peer review certificate. If you don't have a peer review certificate, you cannot take up audit only. That's very simple. Then that is from when? 1st April 2023. Now they've extended it. See, understand the way they have done the extension of peer review, is that now automatically the practice units only will themselves apply for the peer review to be conducted. Because if they want to take up the audit of these big entities, if they want to you really, work with all these for the big clients and all, in order to get the big clients, obviously they by themselves will now go in for the application of the peer review. So in order for them to make it, for the institute, what they have done is very smartly, they have now told, we will not pressurize anybody. Now it is you who are going to apply to us, that you apply for peer review. Otherwise, you'll not be able to do these big entity audits. Okay, so it's been made very, very understandable. Okay, that why is this kind of regulation brought up? Here you'll see that automatically the entities will start applying for peer review. Okay, then from 1st April 2024, they're telling every body corporate which is either raising public money, that is IPOs are there, or they are going up for borrowings from PFIs, from banks. Okay, and the amount is 50 crores. Okay, over 50 crores. That is more than 50 crores. Okay, during the year under review. So IPO is there, FP from financial institutions, you're taking borrowings, loans from banks and all of that. And it is of the amount of more than 50 crores, then that particular entity audit you are going to conduct, then obviously you have to have a peer review certificate, otherwise no. Otherwise you'll not get the audit. Okay, also with that they're telling, or of any body interests which are covered under public interest entities. Okay, so they say practice units which propose to undertake the statutory audits of entities which have raised a fund from public banks or financial institutions of over 50 crore during the period under review, or of any body corporate including trust which are covered under public interest entities. So public interest entities are basically insurance, banks, all that. So for them it is compulsory that you have a peer review certificate, otherwise you'll not be able to take up the audit. Next they say, if this condition is not, then the partner-based condition is practice unit rendering attestation service and having 4 or more partners. Compulsory peer review. Okay, then that is from 2024. Now from 25, this, if you look at it, almost every practice unit is now going to get a peer review certificate compulsory with them, because you see that practice units will take the auditor branch of PSUs, PS Bank, that is public sector banks, Punjab National Bank, all of these. Okay, so these are all what public sector banks, the branch audits you will get, correct? So if you want to do the audit of the branches of the public sector banks, you will compulsory have to have a peer review certificate. And this is going to be mandatory from when? 1st April 2025. If you don't have a peer review certificate, you will not be able to take up the audits only. So basically every practice unit is definitely going to go up for what? The application for this kind of certificate, correct? Or now if you look at this, small firms are also taken up here. Practice unit rendering attestation service and having 3 or more partners. Even in that case, they are required to have what? A peer review done. So basically, if you look at the discussion, very simple, they have made. First of all, they have done it in such a manner that peer review certificate becomes mandatory. Okay, level 1, level 2, they have mitigated completely, and they have classified depending upon the entity, the audit which you're doing, or the size of your partnership firm, the size of your firm, the practice unit. Okay, categorization is phase 1, 2, 3, and 4. Phase 1 only talks about the firm, that is the listed entities, only about the nature of the entity. 2 is going to talk about the nature, plus it is going to talk about partner base partner level, that is 5 or more partners. So partner based condition is there, and here you have about turnover, paid up capital, and borrowing. And here it should be what? Unlisted public company, correct? Then third, you talk about when you take from the IPOs, FPOs, or IPOs or FPOs, or maybe banks borrowings or PFI borrowing, amount is 50 crore or more. Okay, sorry, more than 50 crore. Or if you talk about the partnership based condition, then you should have 4 or more partners. And finally, in the 4th phase, it is talking about the bank audits. Branch audits. And if you talk about partnership based condition, 3 or more partners. And these are phased wise. So this is 2022, this is 23, 24, and this is 25. Okay, so that is the understanding of having a valid peer review certificate. Okay, all right. Now example is given, which is quite understandable. Okay. And understand, if suppose you're already holding a peer review certificate as on 1st April 2023, okay, and if that certificate is still valid, then we are not saying that you require to do a fresh, peer review certificate again. Validity is of 3 years. So if it is still valid, you can continue using that and apply for the audits. But suppose if the validity of that certificate has come to an end, compulsory you have to first get the peer review certificate, and only then you can apply for the audits of those particular entities. Otherwise, you'll not be allowed. Okay. So if the validity is there, you don't have to apply for fresh. But if it is not valid any longer, then without a certificate, you cannot take up that audit. Then comes to the this could be tested for MCQs. Earlier we understood that the peer review board should have compulsory, they've given the maximum limit of 12 earlier, but now they also put the minimum criteria. So there has to be a minimum of 6 members. So when you read earlier the particular provision, you spoke about having maximum 12 members, but now they are bringing in both minimum as well as maximum. So the board should consist of minimum of 6 and maximum of 12 members to be appointed by the council, of whom not less than 50% shall be amongst the members of the council. So your minimum requirement is given. Okay, now they say a time, place, and quorum. Okay, all of these have been removed from understanding. They have directly told whatever is given in the guidelines, you have to follow that. Okay, that will be governed by the Chartered Accountants regulations. Okay, now one more thing is eligibility for a peer reviewer. Okay, for a reviewer, you studied the language, 7-year audit experience. Now it has to be read as 7-year assurance practice experience. So you should have 7 years of assurance practice experience. This word will be eliminated. They're all simple. Then when you talk about the confidentiality paragraph, when you talk about the peer reviewer signing the confidentiality document, they say that a declaration of confidentiality in form 4 shall be signed by all the members of the board and the board secretariat. Okay, so this also is fine. The unless word is to be read as except that when you correlate with the book, you'll understand it very easily. Okay, now the procedure for peer review. Okay, this could be tested in the exam. So let's do it. It's quite self-explanatory. So I'll rush you through so that you understand you understand actually what is there. So procedure for initiating peer review. First of all, two possibilities. Either you, suo motu, apply for peer review. So wherein you are going to make an application to the peer review board. Or it could be a special case where the peer review board is asking you to get the peer review conducted. So in that case, whatever is the situation, situation 1 or situation 2, ultimately the application for the peer review will be done by the practice unit only. So suo motu, you yourself will fill it. If it is come from the board is going to intimate you that you fill the form for peer review to be conducted. Okay. Then once you fill up the form, it goes to the board. Then what the board will do after receiving the form request, they are going to allot 3 peer reviewers. Okay. For your selection. So they will take 3 days time and give you 3 reviewers. And out of which 1 peer reviewer you have to choose who is going to conduct the review of your practice unit. Correct. Then after that, the protocol will follow how the review will be conducted, when will they come, what will they intimate you before time, what is the timeline for all of this to be completed, all of that. So this is quite self-explanatory. We'll have an understanding properly. So practice unit which desire to get peer reviewed shall make an application for peer review. In application come questionnaire in form number 1. Okay, so there is application come questionnaire form number 1, which has detailed questions regarding what services you render, how many partners you have. All the details will be there in that. So those you have to fill up. In case peer review is initiated by the board, the application cum questionnaire in form number 1 should be submitted by practice unit only, but now it is on the request of the peer review board secretary. The application mentioned under clause 6.1 and 6.2 above received by the board shall be duly numbered. Obviously, once they get it, they'll number it. Now, on the receipt of the said application cum questionnaire, the names of 3 reviewers shall be recommended by the board to the practice unit within 3 working days. Very important. Okay, now the days becomes important. The peer review board will give 3 reviewers, and out of the 3, you'll get this how many days? 3 working days. So the date you give the application, okay, within 3 days, they will allot you 3 peer reviewers. Okay, now poor people practice unit will get only 1 day to choose. So they should check, they have to select one of the 3 recommended reviewers and intimate that board within 1 working day. Then after you intimate whom you have selected out of the, suppose if they give ABC, okay, for them to give the ABC, they'll have 3 days time. But to pick whom, suppose you have picked C, you will get only 1 day to intimate to the board. Now, the board shall appoint the peer reviewer, that is C we have selected, by the practice unit in accordance with the guidelines. Board shall intimate the reviewer so selected to submit a declaration of confidentiality in form 2 to the practice unit within 2 working days from the receipt of the choice of the name of reviewer from the practice unit. Very, very important. Okay. So now the board is going to inform the reviewer. Okay. And obviously this reviewer has to submit what? A document signed by him about maintaining confidentiality. Okay. And this has to reach the practice unit within how many days? 2 working days. Submit a declaration of the confidentiality in form 2 to the practice unit within 2 working days. Got it? From the receipt of choice of name of the reviewer from the practice unit. Okay, so that is important. Then the practice unit shall also provide a copy of application cum questionnaire in form 1 submitted to the board as per clause 1 and 2 about the reviewer within 2 working days for the appointment of reviewer. So understand, the peer reviewer has to give this confidential document or confidentiality agreement to the practice unit, and practice unit, what they have given to the board, that is what? The application cum questionnaire. Okay, in form 1 which you have filled up earlier, that you have to submit it to whom? The peer reviewer. Okay, so these will be exchanged within them, between the practice unit and the peer reviewers. Okay, that is quite simple, very easy to understand. Now, before commencement of the peer review, the peer reviewer shall ensure that the declaration of confidentiality is furnished to the practice unit and acknowledgement of the receipt thereof is obtained from him. Again, simple, as it is told already that you have to submit the agreement of confidentiality to whom? The practice unit. So it should not be that you are telling that you have submitted. You should also get an acknowledgement from the practice unit that they have received the agreement for confidentiality. Then, on receiving the application cum questionnaire in form 1 from the practice unit, already we discussed, practice unit has to give this particular form which you submitted to the board while making application, that you have to submit it to whom? The peer reviewer. Okay, so they say on receiving the application cum questionnaire in form 1 from the practice unit, the peer reviewer shall initiate the peer review by intimating to the practice unit the proposed visit and the proposed sample selected to be kept ready to the practice unit. The proposed samples selected are to be intimated by the peer reviewer in form 5 prescribed by the board. So obviously peer reviewer is not going to be a surprise element. Obviously he's going to inform in beforehand to the practice unit what they are going to check, when are they going to come, but what is their visit timeline, which are the samples that they are going to check, which area they are going to check. Everything will be told to the practice unit, obviously because practice unit should make the data available for them. Correct? Then the reviewer may also seek further additional information in form 6 from the practice unit on the information furnished, not furnished by the practice unit in the questionnaire. The practice unit shall provide this additional information to the reviewer within 1 working day. Okay, just to give you a proper understanding. See, when you fill up the form 1, okay, to the board, peer review board, okay, this form is nothing but a detailed questionnaire about the details of your firms, all the services that you give, all the engagements that you have taken up during the year, all of that, all your basic works that you have taken up. Now what happens is, this particular questionnaire only you are also going to give to the peer reviewer. So this peer reviewer will basically get an idea of what are other engagements that you are taking up, correct? Now because of this, when you are giving this particular certificate, he already knows that what all engagement, what all services you're doing. So what happens is, basically from this questionnaire, he will get some idea, obviously. But suppose he requires something more. Suppose he's going to require something more, then for that, what he can do is, he will ask for additional information from the practice unit. And this additional information he will be asking in form number 6. And this additional information, the practice unit has to give within 1 working day. Got it? Okay. So that is going to be 1 working day. Then after that, the reviewer shall within 2 working days of receiving the information from the practice unit, select assurance service engagement that he would like to review and intimate the same to the practice unit and peer review in the form 5. So then after understanding the entire entity, they are going to tell what they are going to check and all in form number 5. The reviewer shall plan for an on-site review visit for the initial meeting in consultation with the practice unit. The reviewer shall give the practice unit at least 2 working days, okay, to keep all the necessary records for the selected assurance service in form number 5. So what they're telling is very simple understanding is here that first of all, you decide and consult with the practice unit and decide all the areas that you want to review. And also you give them the time period of, the peer reviewer will give 2 working days period for the practice unit to make available all the data that is required. Then the reviewer and the practice unit shall mutually cooperate and ensure that the entire review process is completed within 20 working days. Now this will become important, okay? Within 20 working days from the date of receipt of application from the practice unit for being peer reviewed, or from the date of notifying the practice unit about the selection for the review as the case may be. That means we have understood 2 things. One, you suo motu apply, or one, by the request of the board, you have to, by the intimation of the board, you have to apply for peer review. So any which way their timeline is given to you, in 20 days of this particular application, the peer review process has to be completed. Okay, then. In case peer review of the new unit, now you understand the difference why new unit we studied. The reviewer and the practice unit shall mutually cooperate and ensure that the entire review process is completed within 7 working days from the date of receipt of application cum questionnaire from the practice unit being reviewed. Now understand. I told you new unit, we are studying the definition. Why? Because there are certain guidelines specifically only for the new units. And here you see that when for the existing units, they are giving 20 days to complete the peer review process. For the new unit, the timeline is limited to only 7 days. The process is quick. Got it? So here one of the reasons why we study the concept of new unit. Okay, then. When the peer review you studied as a part of earlier thing where you spoke about 7 working days as an execution stage. At the execution stage, we say that the on-site location, that is on-site visit, should be for not it should not be for more than 7 working days. I would substitute it for 6 working days. Okay, so on-site reviews will be only for 6 working days. It has been eliminated. Okay, 7 working days are not there. It is 6 working days. So this also is an important one. Okay, now procedure for review of new unit. It's simple here. They are telling that you should take into account all their functions, the quality, everything, and based on that, you're going to decide how the review is to be conducted. And here, whatever format, whatever review is to be done will be as per the guidelines of the peer review board. One more important thing is when you talk about the on-site review, okay, that is when the peer reviewer actually visits the practice unit. In the existing forms, we give it as a 6 working day thing. But here, understand the on-site visit to practice unit, which shall be restricted only to 1 day. So again, here on-site visit to the practice units, which are new units, there it will be only and only 1 day. Regular, we are having how many? 6 working days. Okay. See here, 6 working days is covered. Here it is only 1. So that is also a difference that you come across when you talk about the new unit. All right, then. Reporting to be read as reporting by peer review. Your things are quite simple. Obviously, after completing the review process, you are going to prepare, the peer reviewer will prepare the report and he will submit it to the peer review board, along with a copy of it will be given to the practice unit. But suppose if there is some kind of information, some kind of deficiency that they've identified, then they will first issue a preliminary report, and that will be given to whom? The peer review, the practice unit. Okay, and accordingly, the practice unit has to take all the necessary steps and redo the procedures which the peer reviewer requires. And then if the peer reviewer is satisfied, he will give all the details to the peer review board and they will issue the certificate of the peer review. And if suppose the peer reviewer is still not satisfied with the practice unit, then he will intimate the same to the peer review board. And obviously, they will not give the peer review certificate to them. Instead, they will ask you to conduct a follow-up audit. Okay, that will be during 1 year, within a period of 1 year. Okay, so that's a simple way to understand. Let's have a quick reading. After completing the on-site review, the reviewer shall submit a peer review report to the board along with Form 9 in his opinion. The practice unit has adequate systems and procedures in compliance with technical, professional, ethical standards. A copy of the report shall also be forwarded to the practice unit. Whatever you give to the board, you have to give it to the practice unit compulsory. In case, in the opinion of the peer reviewer, the system and the procedure of the practice unit are deficient and non-compliant with the reference to any matter that has been noticed by him, or if there are any matters where he wants to seek clarification, then he shall communicate this finding to the practice unit in the preliminary report issued by him. So he has to issue a preliminary report if he finds out something deficient. The practice unit shall within 2 working days on the date of receipt of the findings make submission or representation in writing to the reviewer. In writing, obviously understood, there are no oral communications here. Okay, so 2 working days you get. If the reviewer is satisfied with the reply received by the practice unit, he shall submit unqualified peer review report to the board. A copy of the report should also be forwarded to the practice unit. Again, simple. If whatever submissions are given by the practice unit, if the peer reviewer is satisfied, he will give it to the board and it will be unqualified. So no problem. Whatever he gives to the board, he has to also give it to the practice unit. Then, in case the reviewer is of the opinion that the response submitted by the practice unit under clause 9.4 is not satisfactory, then the reviewer shall submit a qualified report to the board incorporating the reasons for the same. And obviously, when you're giving a qualified report to the board, do you think the board is going to give a peer review certificate? The answer is no. The certificate will be denied. Rather, a follow-on audit will be required. And obviously, the qualified report will also be given to whom? The practice unit. The peer review report should state that the system of quality control for the assurance service of all this is all fine. What is the report telling? That they have complied with all the technical, professional, ethical standards. Then peer review should submit the following documents along with the review reports. That is the whatever annexures, whatever additions the required by the board, you have to attach to the report. The copy of the questionnaire, that is Form 1, which was filled by the practice unit, that has to be attached. Whatever samples you picked up from by giving Form 5, okay, all that also you have to give it to the peer review board. And if suppose you issued any preliminary report containing any kind of deficiencies identified, and also whatever response the practice unit has given to you, all of that you're going to attach to the final report. So final report will have the additions, the questionnaire, the way you have performed the peer review on which all areas, and also if you have issued a preliminary report in case of any kind of qualifications you have, and whatever reply practice unit has given, everything in detail should be intimated to whom? The board. So all of this you will give to the board. Okay. The practice unit as well as the reviewer shall ensure all the documents submitted to the board are duly dated, signed and complete, obviously. Okay. Now this is important. The reviewer and the practice unit shall mutually cooperate and ensure that entire review process is completed within 20 working days from the date of receipt of practice unit from the peer review or the date of notifying. Again, the same discussion. Along with that, a new unit will get how many days? 7 working days. Okay. That is the same repetition here. Then review of report by the peer review secretary under the supervision and direction of the peer review board secretary. So now when the peer reviewer has handed over the report to the secretariat, that is the peer review board, then in that case, how will they deal with it? The peer review board secretary shall ensure that the peer review report is accompanied by all the documents. So all the annexures, the Form 1, Form 6 and all the other details that you have given, okay, whether all the attachments are in full, and they should ensure the documents are complete in all respects. All reports shall be placed before the board and its subcommittees and the consideration of the issuance of the peer review certificate. Obviously, in case of qualified report by the peer reviewer, the peer review board secretary shall place the report before board for consideration. The board may decide for a follow-on the peer review after a period of 1 year from the date of issue. But suppose if the board is satisfied and if the practice unit is able to convince the board, they'll be able to conduct the peer review again less than 1 year period. Okay, which may be reduced not less than 6 months from the date of issue of the report. Okay, as in the case of qualified where you don't get the peer review certificate. Okay, now remaining all is same. Okay, in case of unqualified report issued by the peer reviewer, the peer review board secretary shall place the report for the board or subcommittees and the peer review certificate will be issued. For the new units also they'll be issuing it. Then all the fine. Okay, here important point is the 4th point alone. Okay, the certificate shall be duly signed by chairman, vice chairman, and the secretary of the board. Now, this is very important because I call it to be an MCQ question. They could definitely question such thing in the MCQs. The certificate shall be duly signed by chairman, vice chairman, and the secretary of the board. So here, whichever board is the peer review board. Okay, then the peer review board secretary shall serve the peer review certificate upon the practice unit. And one more important thing is, the peer review board secretary shall update the list of practice unit having valid peer review certificate incorporating the names of practice unit to whom peer review certificates have been given. See why this is done? Very simple. Suppose if you go to a particular client for audit and if the client is inquiring regarding you having a peer review certificate and you say, yes, we have it, it's a valid one. So just for a double check, even the client will have access to the ICAI website and he could check whether your name is really available or coming up in the case of people having other practice units having valid certificate. So because of this, ICAI has kept it on the website itself, all those practice unit which has the valid peer review certificate. Okay, so this is like a double precautionary measure that has been taken. Then finally, obviously, those for whom the qualified report has been issued by the peer reviewer, then the board will take into account and obviously peer review certificate will not be issued. In fact, a follow-on audit will be required, which will be after 1 year period from the date peer review was conducted. Sometime if the board is really satisfied with the reasons, then they could allow for a shorter period, but it will be after 6 months from the original review which is conducted. That's called follow-on review. Okay, so that is quite simple. Then one thing is peer review, once it is conducted, the certificate will be valid for a period of 3 years. As of now, that is the understanding. For the new units, validity will be decided by the board and the guidelines will come up. Whenever the guidelines are there, we'll understand by it. Okay. Okay, so that was regarding the peer review. Okay, very, very important. And according to me, okay, I genuinely believe that the applicability, okay, of having a peer review certificate and the procedure, okay, especially the dates, okay, the number of days, okay, the number of days basically 2 working days, 6 working days, 7 working days, 20. Okay, all of this becomes extremely important for you to remember. Okay, it could be as a case study based MCQ where they could test you on all of these concepts, or they could also be testing you directly as general MCQ, or you could have a straight question also on what is the procedure. So I would consider timelines here to be really important. Okay, then moving on to the last one. Okay, that is where we talk about. One second. Last one is talking about professional ethics. In professional ethics, there have not been major changes, but yes, there are some changes which have been important. And again, this will be examination focused. This is regarding those particular disclosures that we have to do. Earlier, these disclosures which I'm going to discuss now, we ever used to give it to TCWG. So basically, here we're talking about a situation where there is going to be a threat to independence existing. So threat to independence, as in here they have told, if suppose there is a particular client from whom major part of your fees have been received, then it will be like an over dependency upon those fees, because of which there could be a self-interest threat. Okay, because you should not lose the client and all the financial interest you don't want to lose. So there'll be a self-interest threat, or sometimes there could be an intimidation threat also, because you'll be, having a fear of losing the particular client, because of which you will be actually, a little bit more moderate or less, you'll be compromising on the objectivity basically. So here they have put some kind of safeguard, or they have made a disclosure requirement as a part of code of ethics, okay, that you have to fulfill if suppose you are receiving major part of the fees from one particular audit client. Okay, that is here the discussion. First of all, you need to understand what was earlier. Earlier they said that disclosure is required where 2 consecutive years the gross annual professional fees from one particular audit client represents more than 15% of the total fees of the firm. So suppose out of 100 rupees, if you're receiving 20 from one particular A Limited, that means more than 15% of your total audit fees that you have received during the year is coming from one particular firm. Then in that case, this particular information you have to inform to whom? TCWG of A Limited. That was told. Now they're telling, forget first about TCWG. Now you directly have to inform ICAI Institute. And second, they're talking about, they have increased this particular threshold, and also they have told it is depending upon public interest entities and non-public interest entities. Okay, but very important, no longer you're going to disclose it to to TCWG. Now the disclosure is made to whom? To the institute directly. You are not required to give it anywhere. Directly you go to the institute and you have to report to them what is the level of fees that we are covering from that particular client if it is crossing that particular limit. Okay, so here they say, in case of for non-public interest entities, they're telling, if suppose from one particular client, if the fee that you're receiving is representing more than 40% of the total firm's audit. For example, if 100 is the total audit fee that you're receiving, or the total fees that you're receiving from the firm, the practice unit is receiving total annual fees of 100. Out of that is suppose 45. 100 lakhs is the total receipts. 45 lakhs are receiving only from one particular client, maybe A Limited. And it is a non-public interest entity. Then in that case, maybe it's a private sector or it is a partnership or something from where you're receiving 45 lakhs. Now, in that case, more than 40% of your receipts are coming from one particular client, because of which now what they're saying, this particular information you have to now disclose to ICAI. You have to inform about it, because we consider this to be a threat and it has to be intimated to ICAI for this. Similarly, when you talk about public interest entities like bank, insurance companies, all of these where public interest is there. So there they're saying, if suppose the total annual receipts, okay, out of which more than 20% is coming from them, then in that case you have to inform ICAI. Here it is 40%. Here they talk about 20%. Okay, please remember this for the exam point of view. They could test you on this. Okay, but one very, very important. Suppose the total audit receipts of yours or total receipts of the firm is only 20 lakhs. From all the clients taken together, if your total income is 20 lakhs, then absolutely this disclosure is not applicable. So even from this 20 lakhs, if suppose you're even receiving 19 lakhs from one particular client only, doesn't matter. But if your total firm's receipt is not crossing 20 lakh, absolutely no disclosure to be given to ICAI. So understand they're telling, if the total fees received by the firm does not exceed 20 lakh rupees. Okay, that means altogether 20 lakh is the maximum fee that you're receiving, total firm. Then in that case, even if suppose 90% of it is coming from one particular client only, does not matter. This particular regulation not applicable on you. Okay, so it is for the 40%, 20%, and non-applicability is the total firm fee itself is 20 lakhs. Okay, then all this is fine. Your important one, earlier you disclosed to whom? TCWG of the audit client, that is the company whose audit you're doing. But now you're going to disclose this to institute, that is ICAI. Okay, then the pre-issuance, post-issuance review and all, now all that is gone. Earlier required to conduct a pre-issuance report, post-audit, post-issuance review, all had to be done in order to eliminate the self-review threat. Okay, whenever major part of the fees, okay, were received from a particular client, then you were required to conduct post-review, peer review and all that. See, as a part of your syllabus, they had not included it, but these guidelines were there. They were supposed to make it applicable. But now the applicabilities come directly after this amendment. So basically, this is what you have to remember. And this pre-issue review, post-issue review, all has been eliminated. So the concept here was, if suppose more than 50% was coming from one particular client and that was a listed entity, then you have to conduct the pre-issuance review and post-issuance, which would be done by some third parties and all that. So that is all to eliminate the self-interest threat and all that. Okay, so now it is not there. It's like a safeguard, it was there, but it's been removed completely. Okay, now you are fine. They have spoken about the tax service given by the audit client. A minor change, you can ignore this. Now the problem here is there's a contradictory thing, because when you look at the requirement, they say NOCLAR is not applicable for your examination, but here they have given an amendment which has been coming from NOCLAR. So non-compliance of laws and regulations. So because I believe NOCLAR is given as a part of amendments, this is going to be applicable for your exam. So I believe that yes, NOCLAR is going to be again back to your syllabus. So I think you should study this as a part of your exam, only because then amendments will make sense here. Okay. So first of all, about non-applicability laws and regulations, we earlier studied it was applicable to all the employees of only listed entities, but now it has been made little bit curtailment. It's applicable to senior professional accountants only in service being employees of listed entities. So they have made it senior professional accountants, and also they're telling that the definition of senior professional accountants now will be eliminated from here completely, and they're telling it refers to key managerial personas. Okay, so here senior professional accountants will be considered to be of the listed entities for whom it becomes important to comply with NOCLAR, and senior employees, they have included all the key managerial personnel. Okay, so all employees are not taken, only senior, and senior means they've taken KMPs. Okay, this is very important for exam point of view, for which it is applicable, the NOCLAR reporting about NOCLAR, applicable to audit engagements of all the listed entities. Okay, but now they're saying it is applicable to audit engagement of entities, the shares of which are listed on recognized stock exchange in India and have net worth of 250 crore or more. So not all the listed entities, only those which have a net worth of 250 crore or more. The applicability of section 360 will subsequently be extended to all the listed entities as on the date notified later. So when you look into the later amendments and all, we'll see that a new notification will come where it will not be restricted only to these net worth people, but in fact, all the listed entities will get covered again. So as of now, for your examination point of view, you have to remember the share should be listed on the recognized stock exchange and the net worth should be 250 crore or more. Then only LOCRAR will be applicable. All right. And this audit engagement is fine. Yes. Yes. So that is all the discussion that we have. So in professional ethics, I would recommend that about the NOCLAR, the applicability becomes very, very important. And obviously, when you talk about this disclosure requirement to the institute regarding the fees, where we are trying to put it like a safeguard for eliminating the threat or mitigating the threat, very, very important discussion. Here, peer review, when you talk about the discussion regarding the mandate, that is applicability, where it is statutory, where it is mandatory, the phased-wise classification, the voluntary one, very, very important for the examination. More so ever, when you talk about NBFC classifications, be very particular to understand which NBFC goes under which category. Small company, you have to be very careful when if the applicability of a CARO or the company audit some specific questions on small company applicability is there. You have to be very, very careful because there they can question to test whether the amendments has been done or not. Okay, about forensic audit, I would not call it to be a change absolutely. It is just a replacement of the term. All right. So remember the two professional ethical clauses which are going to get picked up. That is the clause 6 of the part 1 of first schedule, where the audit the audit matrix, okay, the maturity model, if you're disclosing it anywhere, the rating that you have got, disclosing anywhere, that will be considered to be advertisement, where under clause 6 of the part 1 of the first schedule, you'll be guilty of professional misconduct. Second, when you talk about is regarding your you say that the guidelines, the peer review guidelines are now considered to be the guidelines issued by ICAI. So they are under the regulations. So if you don't comply with any of the guidelines of peer review, again, you'll be guilty under clause 1 of the part 2 of the second schedule. So basically, this is a very important understanding. Okay, they could question you as a part of professional ethics also. So with this, we have completed all the amendments. I am very sure every student will now find it very simple. Okay, and I've purposely picked up the institute RTP paper itself in front of you so that when you read it, you are in line with it. And when you revise, things will look very simple to all of you. So with this, we will close the discussion of all the amendments that we have. And this is a good coverage and you'll be able to cover up everything. Okay, so all the very best to all of you. And this is the complete discussion of the amendments. Already I've uploaded the RTP discussion of the question banks, that is the case study, general MCQs and all the descriptive questions. So you can go through that for the remaining question bank, which is there in the RTP. All right. With this, we close the discussion here. Thank you.